In today's video, we are going to be deep diving into the 12-hour chart, solely focusing on fair value gaps. No distractions, no gimmicks, just price action. I'll show you the results of the backtesting. I'll also forward test this, and let's see what it takes to make this strategy successful. If you're ready for raw, unfiltered trading insights, you're in the right place. Let's get started by showing you a cherry-picked example so that when we go back in time to forward test, you know exactly what we are looking for. Let's get started. In front of you, we have got the 12-hour chart, and what we are first looking for is a fair value gap. And straight away, you'll notice that we got a fair value gap here. And all we're waiting for is price to come down into the fair value gap, preferably in the middle of the fair value gap, which is easily possible by you selecting a rectangle, and then you got the middle line of that rectangle. Fairly simple. Once price is at this level, we are then going to be entering the trade. Our stop loss is going to be going below the candle that had created this imbalance in the market, where price is coming back into it to fill it. And then we're going to aim for a 5-to-1 risk to reward. And we're going to see how this plays out. You're going to see some winning trades and you're going to see some losing trades. But our purpose for this video is to explore whether this would work in a real life scenario. This is the forward test will come. And also keep in mind that at the bottom of the screen, you've got the forward test P&L. And let's see by the end of the video what P&L we can get. Can we achieve a 10% balance increase on our overall account, whether that's a funded account or whether that's our personal account? I'm going to be, for the purpose of this video, going to be starting with a 200k account, which is completely demo, and we're going to try to aim for 10% of that. So that will be us risking 1% of the account, which is 2k, and we're going to be aiming for a 1-to-5 reward to risk. Let's see if we can get that 10%. You ready? Let's go. So we need price to arrive at this area. So let's see how things are going on. Okay, price has now arrived at this area, and all we're going to do is execute our buy, but we need to make sure that it is a 1% trade. So we are placing our stop loss just below this candle. Okay, and you can see that we are not at that 1%, so we're going to increase our position size until we hit that 1% mark. So we're almost there. Yep, so we got 1%, and then we are aiming for a 5-to-1 reward to risk, which is give or take around, should be around 10k, about there, should be about 10k, give or take. Okay, let's see how this trade plays out. Of course, this is a cherry-picked example, but for the purpose of the video, you just want to see how this plays out. Okay, and we hit TP, and as you can see in the middle of the bottom of the screen, that's our forward test P&L. Let's take a look at one more example on the sell side, and all we're going to do is wait for a fair value gap to form. Now there is a fair value gap here, and this one you'll see that it'll be a loss because I've already seen it, but a 1% loss isn't much compared to if you were to, let me show you, if you were to take another long position here. Okay, didn't quite hit the level that we were looking for, the middle of the fair value gap, but let's just carry on and see if price arrives at our level. It's almost there. Okay, on this side of the screen we are just using the 15-minute chart just to slow down price action so we get into the trade. Okay, we have got a scenario where price has now entered our buy area, and very simply we're going to be entering a long position. Let's get that long position there, just there. We're going to enter our stop loss at the body of this candle that created that initial fair value gap, and we're going to aim for a 5 to 1 again. There it is. Let's see what happens. Again, we're going to be going for our stop loss at the bottom there, and then we're going to aim for 5 to 1. So you can see that we are there, and we're aiming for just above there, and let's see what happens. Okay, you can see that price has broken through the fair value gap. We're not too bothered about that. We got stopped out, but guess what? We are still up 7.9k. Okay, move on to the last example before we go and we completely randomize this test. Okay, so this one got stopped out, and let's see if there's another fair value gap created. Okay, we have got a fair value gap just there. Let's just get rid of the execution just to get rid of the arrows. Okay, we have got a fair value gap just there, and we have also got a fair value gap here. Which one do you go for? We're not too bothered. We are just going to enter on the fair value gap that we see, which is this one here. And all we want to do is get ready for that. So let's get ready. Stop loss over here, and we're going to go for a 5 to 1 reward to risk. Price hasn't arrived, so let's see what happens. Okay, we've created our fair value gap because we need to have 3 consecutive candles with an imbalance in the middle, which we have got. And now we're just going to see if the next candles on the 12-hour push into this fair value gap. Let's see what happens. Okay, it doesn't push in. That's fine, not yet. Okay, all right, we're pushing up higher. Okay, almost there. Okay, there you go. We did push in. We're just gonna go back just by 1. Just gonna go back, and let's see what happens. Okay, there you go. So price is there. We're gonna enter that short sell, stop loss above the candle, which is just there, and we're gonna go to 5 to 1 again. Now let's just make sure we get to our 2% risk, which is about 10k, about there, and we execute that trade, and let's see what happens next. Okay, wonderful. Our TP got hit, and we just hit another 10k. Previous trade was 10k. We lost one trade, 2k, which was at 8k. Then we've just made another 10k, but because I went back on the bar replay, it reset, which is fine. So we're close enough to 20k almost, which is not far away from our 10% target on a 200k account. That will almost pass. This looks absolutely amazing. Only reason is because I handpicked these examples to show you on the screen. So let's get rid of all this, and let's pick a random date. At the bottom of the screen we have got random dates. These are all random. I'm going to click it 3 times, and let's see what prices we get. We get June the 13th. Let's do it again. January 24th. That was a random. Okay, let's do January 24th because we've just randomized it 4 times. And price is at this level. So where is the fair value gap at the moment? The fair value gap is down here. So we will put a rectangle box down there, and we will just wait for price to arrive at this level. Let's see what happens. Does price arrive or does price not arrive? We wait. Okay, price is, we're still waiting. If this strategy works out beautifully on the back test, because it's a 12-hour chart, you could go away and carry on with your normal day-to-day life, whether that's you working or whether that's you wanting to spend more time with your family. You can just set and forget that trade. So this is what we are looking to do. We're looking to enter there with stop loss at the candle body there, at the lower candle body there, and we're aiming for a 5-1. That's what we're aiming for. Whether we get it or not, that's a different story. Okay, so far we have got a fair value gap just there, but we need to wait for that candle to close, which it has. And let's see if this fair value gap works out nice. Now this fair value gap is a lot more smaller than these fair value gaps, so in terms of the setup, this would be more of a B setup. The bigger the fair value gap, like for example this one here, the more higher probability it would be. But because this fair value gap is a lot smaller, this would what I would call a B setup. So how would you play this trade? You would play something like this under the candle close there, and you would very simply go for a 5-1 again. Okay, there you go. So let's see what happens. Does it arrive at our level or not? Okay, it's trying to. Okay, almost. Okay, so it has arrived at our level just there, you can see. So pretty much what we would do is we would just enter the trade, whether it gets stopped out or not a problem. Let's just enter. We got a better entry because the candle close was just there. Some may have entered there, which is fine. So let's see what happened. We're just gonna go for a stop loss below there, and let's make sure we can get it to our 2k mark. Now at this point, if it's a B setup, you may decide to go half the size than your normal 1%. You might want to go 0.5%. There you go. And let's go for a 5-1, which is about there. Okay, let's see what happens. We either get stopped out or we win. Okay, we're already down. Okay, we got stopped out. That's fine. We are currently now minus 1%, which is 2k. Okay, and this is why B setup, you want to make sure that you categorize your trades, know which one's a B setup and know which one's an A setup. Okay, this one got us stopped out, but we've also got another potential fair value gap down there, which is about there. Let's get rid of this fair value gap, which didn't work out. Okay, and we will wait for the next fair value gap to form, which isn't confirmed because this candle could easily come back up and get rid of this fair value gap, just like that. Okay, right, we are heading towards the other fair value gap. Okay, beautiful. We have got a fair value gap potentially for a short position here, and we want to make sure we place our stop loss candle close. We're aiming for a 5 to 1 like this. Okay, let's see what happens. It may well be that we get another fair value gap here, but we need to wait for another candle, and then we would go for this one. Okay, you can see price still going down. Okay, most likely we're going to have a new fair value gap, which is down there. Okay, there you go. We've got a fair value gap there. And what we're going to do again is we're going to place an entry there and a stop loss at this candle, yeah, which is the fair value gap between this one, you can see, between these three candles there. And we will now wait for price to come back into that area. Let's see what happens. It doesn't come back into the area. However, it does arrive at our low fair value gap here, which is what we were waiting for initially. Let's see what happens. Okay, price is pretty much there or there. There you go. Okay, price is there. So we're going to market execute that trade. Okay, execute that trade, and then we're going to place our stop loss at the bottom of this candle, just like we did with the previous ones, and we're going to aim for a 5 to 1 reward to risk. Let's see what happens when we do that. Okay, we just need to reduce our position size slightly. Okay, almost there. Give or take. There you go, give or take. And we're going to aim for that 5 to 1, which is about there, give or take. Okay, that's our setup. Let's see what happens. It can easily blast through this, or we can start to go back up. At this point, if we have a situation where we have fair value gaps to the upside, what do we do? Do we counterplay these fair value gaps, or do we let the current trade play out? Because these fair value gaps, what do we do in this situation, right? Let's see what happens first. Okay, price is now hovering. Okay, we are in somewhat profit. Okay, price is up 1,000, 1,300, 1,800, 2,000 right now. Okay, and do we create a new fair value gap? You can see we've got a potential new fair value gap up there now as well. So let's see what happens. Okay, we've got a new fair value gap forming here now as well. So this is telling me that because we've got fair value gaps here, there's a high chance that the price will continue to go up and we'll get a reaction at these fair value gaps. Okay, so I'm going to now place some fair value gaps there, and there could be a potential to re-enter here, going up higher. Let's see what happens. Okay, guys, we're currently up 3k, and we have a reaction at this fair value gap here, but the momentum is telling me that we want to go higher. So at this point we have got a choice. Either we book our profits here at 3k, or we let this ride go play out, because the momentum seems to be quite strong. If the next candle closes under this, then we can think to ourselves, well, price may go down lower. So what do we do in this situation? Me personally, I'm just going to let this ride out, because we've got fair value gaps at the bottom, and there's a high chance that price will come down here and react and go up higher. So for us to get a 5 to 1, if you take a closer look, if I was to place the trade there, or the trade is already placed there, can we get a 5 to 1 before we react to that fair value gap? Maybe not, because you can see very closely it may have a reaction, but let's see what happens. We have got reaction, price is going, okay, we have got that reaction wanted. Okay, and price is going towards that fair value gap at the bottom. but it's stalled. Okay, price is going higher, price is coming down. Can it hit that fair value gap? Okay, it has hit that fair value gap just there. As you can see, at this point you could decide to enter the trade there, right there, enter a long position there. Stop loss again would be right there, and you could aim for a 5-to-1. That trade itself got us, if we did enter, at 3-to-1. Let's get rid of that. Let's get rid of that for a second, and let's see what happens. Okay, price is reacting. Okay, beautiful. Price has reacted, and we have already got a 2.85% gain on that. And let's put it at, we haven't entered another trade. I've just left my original one open, but I'm just giving you the train of thought, because it might look good right now, but we could get stopped out completely and we could have a loss. But we're just playing it as we go along. Okay, price is going higher. Wick rejections here is telling me that price does want to climb higher. Okay, now we have got a strong wick rejection at that level there, which is telling me that price may well come down. And if you get the candle close below that, then you don't really want to be in. But we're just going to let this play out and see what happens. Okay, we've got a reaction. Okay, price is going sideways at the moment. We've got a lot of reaction happening. Okay, you can see price does want to go higher. Okay, we have got another reaction from this fair value gap here. So at this point, a lot of you guys may have looked at this and thought to yourself, well, why don't we take a short position there? And that could potentially worked out if you put your stop loss above that candle high, which is in between the fair value gap, and then you aimed for a 5-to-1, which is about there. And just it's just a question whether you believe that price will come down into this area with an open trade there. So personally, me, I am going to just continue to respect this and let the whole trade play out. Or might be that you guys decide, well, 5-to-1 is a bit too far. I'm just gonna book profits along these fair value gaps, which is totally reasonable. So let's see what happens if we just stick to the plan. Okay, price is breaking up higher. We got a wick rejection. Still, we want to go higher. Can we do that? Okay, price is going higher. Now we're currently up $5,000 at the moment. And hopefully we hit TP. If not, we don't hit TP, but we learn something from this. By you looking back at past data and then forward testing, you will learn about this strategy on individual pairs. And if you back test it enough, you will understand each one has its own characteristics. But so far we haven't used any indicators. We haven't used anything other than just a fair value gap on the 12-hour. Let's see what happens. Okay, no new fair value gaps have formed. Okay, we have got a potential new fair value gap potentially forming. Yep, we had a little one just there, but we have got one here, you can see just there. Okay, right there. So you got one little one there. Can react at that point. So far we have been in this trade from 17th of Jan and now it is 11th of Feb. So we have been holding this position for some time, and based on this so far, it may well have been better just to basically book the profits at the next fair value gaps. If there are fair value gaps nearby, just booking them along the way may well have given us more R. So anyways, let's carry on and let's just get rid of some of these old fair value gaps, and let's get rid of this, and let's just make sure that price, okay, so far okay. So what we learned from this straight away is that we were in good profit at that point. 5 to 1 may have been a bit too ambitious at this point. We may have been able to book profits along these highs. Again, we are testing whether the entry points on this strategy is good or not. Now here's the other thing. We've got a situation where we've got another fair value gap over here, okay, and we could have a situation where price comes back into this fair value gap and we take a short position. Let's see what happens. Do we get stopped out first? Okay, so far we're getting reacted. Okay, we have got a reaction at this point. Should we at this point take a short with a stop loss below there, and again we go for a 5 to 1 or lower? So far the strategy is putting us into profit, which is nice to see. Okay, price is going higher. Okay, our original trade is still valid. Okay, this trade, had we taken that short, it would have stopped us out. And many accounts there that trade, they do multiple different positions. So with this backtesting, if I was to add a short, it won't let me. So this is why I'm not adding, I'm just doing it like this. But had we entered this trade, we would have been a loss, and it was a fair trade to enter, so it wasn't wrong. But let's see what happens. Can we at this point get to our original trade or not? Okay, we are still going sideways. Okay, just gonna let this play out. We're just going sideways at the moment. You got to remember that you're in this trade for a while. Okay, all right. Wow, we are now up 7.6k, having been in the trade for a fair while. We have got a new fair value gap that has just formed at the bottom here, right there. You can see. Let's get rid of that for a second. And this might even be another entry there, and it could be a 5 to 1 again if it allowed us. So let's see what happens. Okay, we've hit TP, so we are up 8.5k, and you can see that we entered off this fair value gap from the 17th of Jan 24, and TP got hit, almost stopping us out, and TP got hit at March 24. So that is a fair amount of time to be waiting for 5R. In between, we could have traded different fair value gaps. We could have entered a fair value gap, exited another fair value gap. We could have taken another counterplay on that fair value gap. And yeah, so far it looks promising. Let's see if we can find another trade. Let's get rid of that for a second. If you are enjoying this content so far, then do smash that like button. It seriously helps out the channel. And if you have any questions, then do drop them in the comment below, and I will try and answer them. So we have got a fair value gap down here. Let's see if price can come back, interact, and let's see if we can get another trade. Okay, we have got a potential new fair value gap forming here as well. Okay, let's see if price can come down. It doesn't come down, and we have got another fair value gap forming here as well. Okay, we have got somewhat of reaction. Okay, we've still got reaction playing out. We've got a little fair value gap just there. Again, looks more like a B setup. And the fair value gaps you can see from the origin of this move, which was from here to there. This was the start of that move that broke that structure. The A setups would be more kind of more towards the bottom, and the B setups would be more at the top. But we're just going to execute them as they are. Okay. Let's see what happens. Okay, so we have got a B setup that's playing up. Only reason it's B setup because we're right at the top and we're getting wick rejections. Now if we had entered this trade here, it would be something like this. Stop loss at the candle low, which is there, which is candle there. And then we're just going to go for another 5 to 1. And let's just see what happens. You may decide after testing this strategy yourself whether 5 to 1 might be a bit too much. That's absolutely fine. You decide for yourself what R that you want to go for. And the only way you're going to do this if you back test and forward test this like I am right now. Okay, buy. Stop loss at the low there. And let's go for a B setup. So I'm going to go half the position size this time, just because I've learned from the previous trade. Okay, so I'm going to go with 0.5%, and then let's go for something like this. So 5 to 1 would be somewhere down here, because risking 0.5%, 1k, and we're trying to make 5k. So I'm not really sure why. Oh, that's why, because entry's there, and the 5% is just, this should be give or take there anyway, give or take. Okay, so let's see what happens. Does price, nope, takes us out. B setup, no problem. B setup, we only risked 0.5%, and that's absolutely fine. That one didn't work out. Let's see if the next one works out. Okay, now we have got a potential short opportunity. Yes, we have. We've got a short opportunity down there. And let's see if we can enter this trade here again, and then go towards this fair value gap. Now the R on this fair value gap isn't quite a 5, because the 5 would be down there, but it would be more almost a 3 to 1. But let's put the 5 there anyway, and let's see if price gets there first. Okay, price does get there. Let's take the short. Stop loss above this high, and because we are trading towards the top end of that move, we're going to go with 0.5%. I'm just going to go for a 5 to 1, which is about, give or take, around there. 11.35, give or take. Let's just reduce the risk by a tiny bit. Reduce that risk. Okay, there you go. Reduce that risk. Okay, give or take about there. Okay, let's see what happens. We've got the reaction we wanted, instantly in profit, but then we are going to draw down. We got stopped out another 0.5%. Not a problem. Let's get rid of that. And let's get rid of that. Those things didn't work out. Not a problem. We wait for the next fair value gap. Okay, we have got a potential new fair value gap forming. Okay, we have got a little fair value gap just there. Can this play out? Again, if it's a B setup, we take the trade. Stop loss there. And we enter. Wait. You can see we're gonna do 1% again. Sorry, not 1%, 0.5%. And we're just gonna aim for 5 to 1. Let's see what happens. You get stopped out again. Looks like it. Looks like it. Okay, we got stopped out again. No problem. We are still in the positive. of 5k. So straight away, what we're noticing from this backtesting with the foretest is the B setup in this particular strategy on the 12-hour with gold isn't favorable. So it's better to not trade the B setup. What makes a B setup is if the fair value gap is tiny. You can see in terms of comparison how tiny this one is to that. And also if we are towards the top end of that trade trend. Okay, so that didn't work out. We wait for price to arrive here and let's see what happens. Okay, okay, nothing yet. Price is going up. Okay, we have now created a better fair value gap, but in order for this to confirm as a fair value gap, we need to wait for the third candle, which has given us the candle. And again, this is what we would say to be more of a B setup. And the reason why you would say this one is a B setup, even though we have got the fair value gap there, is look at that candle wick there. Can you see that candle wick? That's telling me that we had a strong rejection at this point. So again, if you feel at this point that the fair value gap here is decent, but we got a wick rejection, you don't want to really class that as an A setup. It would be a B setup. Let's take it anyway, and we will do a buy on that. With a B setup, we're going to go with half the percentage size, and we're going to go for a 5-to-1 again, which is up there, and let's see what happens. Do we get stopped out again, or do we carry on going up? Okay, wow, almost got stopped out, and we have some wick rejections, but price is going up higher. Okay, finally a B setup is working for us. So the gap itself was decent enough to offset that wick rejections, but we still managed our risk. Okay, we still managed that risk, and now what we have got is another fair value gap over here, and at this point we can even take another trade, but we're still waiting for the 5-to-1. Can we hit it? We hit it. So now we are currently up in terms of P&L, we are up 10k because we made all our losses back, plus we're in profit. Can we come back into this area here, and can we take another trade? Let's see what happens. Okay, we are coming somewhat down, not quite yet. Let's see what happens. Price just wants to go higher. Not a problem. Let it go higher. That's fine. Let's carry on. We have got a tiny B setup fair value gap there. But as we learned previously, the tiny fair value gaps haven't been favorable, so we're just going to avoid them. We have got a better fair value gap over here, just there. Okay, alrighty, so we have got a better fair value gap here. We have got a wick rejection over here from that candle, so that is telling me that this would be more of a B setup. Let's take the trade. Let's see what happens. Let's take the trade. It's more at the bottom end of it. Stop loss below. Let's see if we can get a 5-to-1. We're going to do a B setup. There you go, B setup. I'm going to go for a 5-to-1. It's quite mechanical, isn't it? Okay, the B setup is in profit. Okay, and it tagged us out, and we have got 0.5% loss, which is fine, and the trade did go into profit. And yep, it did go into profit. That's absolutely fine. We'll get another opportunity to do it. We have got a B set up on a short sell, potentially down here. Okay. And let's see what happens. Can we get... Okay, we have got another setup just here as well, a sell. Now remember that setup that we had here, the B setup there? And we decided not to go and take that because previously when we looked at these B setup fair value gap, they didn't really play out very well. Well, we avoided. Let's see what happens in that reaction. So far, had we entered the trade, it would have played out. Okay. Okay, price is arriving at our fair value gap here, which is more of a setup trade than this one. All right, price has arrived at this section here. Now the only thing is, can I get a better entry because I skipped it too much and I don't want to bar replay this again because then I'll lose my P&L. But you know what, because we entered fairly late, at this point you might decide this is more of a B setup because we entered late, and let's go for that 5-1, which is down there anyway. It's a B setup, so I'm going to go for B setup because I missed out my good entry. Okay, let's go for 5-1. Anything that doesn't align perfectly with your A setup trade, if you even get one distinct difference, it's better to cut your size and treat it like a B setup. And we're going to go for a 5-1, which is about, give or take, about there. Give or take there. Risking, that should be 5,500 actually, it should be down there. Let's see what happens. Okay, price did come back. It looks like it might stop us out. Yep, it stopped us out. No problem. Half the size we went in. And I've just realized that my stop loss should have been higher. Yeah, that's why it got stopped out. Okay, so that was my fault because I didn't place a stop loss. Stop loss should have been at this candle high there. So I'm just going to enter another trade just to give it the opportunity to have potentially played out. Don't care too much about the loss right now. And let's give it the setup that it should have deserved. It's a bit too much, so we need to take some of that size off. Give or take. And then we're going to go for 5-1. Let's see what happens. I bet some of you guys that are watching this, you're thinking, oh my god, you placed the stop loss in the wrong place. You should have placed it there. I know. I just realized. Let's go. Come on. Let's see what happens. Okay, we're getting good reaction from that fair value gap. We are in profit. It's blasting through right now. So that's a decent chunk of change right now that we've got. We've already reacted from this fair value gap, so I would want to see it just waterfall down to that area. See. Okay, we have got another fair value gap B set up just there. So let's see if that helps it to drop below. There's another fair value gap just there, more of a B setup one. Okay, price is reacting. Wants to come up higher. Okay. Price is coming up higher. Looks like it's going to take us out. Not a problem. That's absolutely fine. What I enjoyed seeing is the profitability as price went into that area and how price reversed into this stop loss zone, which is absolutely fine. Not a problem. So let's get our tools out now and mark out some decent fair value gaps, which is there to there. Okay. So okay, we got some reaction happening. Okay, There's our potential A setup trade. We have had a fair value gap here, which it did react off of. You can see that right there. So that could have been a short play there. Might not have had a 5 to 1, but let's see what this one plays out. We enter that trade, stop loss below here. Now this one is a bit too optimistic because where the stop loss is placed might be a bit too optimistic in my opinion. So a 5 to 1 would mean that price has to break above the highs up there. Can it do it? Can we get above there? We'll find out. Okay, we're in profit. We're in decent profit. Look at the amount we're in profit. Would you be happy with this amount? Okay, price is reacting. No problem. Okay, we are up. Okay, breaking all-time high. Okay, beautiful. So there's another fair value gap that just formed there, but it didn't quite enter our midline, so we wouldn't have taken that trade. At this point, you might decide, you know what, I'm up this much. I might want to move my stop loss. If we had entered there, I'll move my stop loss there, because we've seen from the back test that when price breaks below the candle that we place our stop loss, it does reverse on us. Or sometimes you get wicked out and then it carries on. So if that's the case and you're worried about it being wicked out, let's just place it there. So at least we got something from the market, right? Let's see what happens. Okay. Okay, so this is exactly what's happened. How do we place our stop loss there? It would have taken us out. So I think personally this trade is going to take us out. Okay, as we thought, it took us out. So we're almost there, but it took us out. Not a problem. Now we have got a situation where we've earned some profits, as you can see. We earned some profits. Now we've got some new fair value gaps forming. Okay, remember this fair value gap previously here that we entered upon? It's arrived there again. Because this has been used already, I'm not going to use that one again. But we can see there's fair value gaps across the board at the moment. And let's see what happens. We have got another fair value gap here. Okay. Could we have entered that fair value gap there? Potentially. But we are at the bottom of this move here. So we might want to actually wait for it to arrive a bit more higher before we take it. But it could perfectly play out. Okay, so price did arrive again. We got a slight rejection there. Let's go for it. Let's just see how it plays out. Okay, we're going to go for a TP. Stop loss just there. And we're going to go for a sell. We're going to go for a 0.5% because this is more of a B setup, because fair value gap's okay. However, we're at the bottom of this move. Can you see how long it taken us there? So I'm thinking price may well retrace deeper. And let's just go for the usual 5 to 1. Okay, almost stopping us out. I just stop. No. Yep. Okay. This is why we say it's a B setup. We're still in profit. Look at our P&L so far. Still decent. This is more of a B setup. If it does arrive there. This one has been used. Okay. Okay, we have got a reaction. We've got another fair value gap there again, but that's more of a B setup. Just because how small the fair value gap is. We are looking to go lower, it seems, towards this fair value gap that we have marked out there. Okay, now we have got a situation where we've reacted at this fair value gap. Because it's such a small fair value gap, I wouldn't have taken that. But let's see what happens. Now we've got a fair value gap here. This is one that I would be looking to take if it arrives, and then aim for a 5 to 1. The only problem is we've got fair value gaps at the top, so we would want them to be disrespected. See, that one's been disrespected. Okay, had we taken this trade here, that one would have been a loss. So that would be minus, well, because we considering this a decent setup, probably going to be 2k. I don't want to reverse it, but yeah, that would have been a loss. Not a problem. We move on to the next one, and let's see if we can get a better trade. Okay, all right, we have got a potential fair value gap there, but we need to wait for another candle. Yep. Okay, there you have it. Can we see price? Okay, it is almost there. Almost. Once it taps into our middle line, we will execute a sell. Okay, let's execute that sell. Let's execute that sell, and stop loss will be above here, and we will go now. This move would be more of an A setup because we've got a decent amount of size and we haven't got a strong wick rejection here. So let's do the 1% move, and then we are going to go for, which is down there. Make sure the stop loss is okay. There you go. Let's see what happens. Do we get stopped out or not? Okay, guys, it's looking promising because we're in good wick rejection. Okay, if we can break below. Okay, looking good so far, guys. Looking brilliant. Okay, okay, not looking so good now, but we were in decent profit. So far, we are still in the trade. We're about to get stopped out. No problem. We're stopped out in that area. So let's move this to this fair value gap here. You can see got a fair value gap there, and we can potentially do a buy. We could have bought down there, and stop loss would have been just below there. And again, what would you say this to be? A B setup or a setup? This one, had I realistically chosen at the time, I would be looking at the swing from this high to there, and you can see that it's quite at the top, so I would be considering this more of a B setup. So let's put that at 0.5%, and then we're just going to go for that. Yep, no problem. We are now down at 5.5k. We're still overall profitable, and there's a lot here that we can see that we can tweak, we can make better in terms of profit taking and that. Overall, what I'm noticing from this is the profitability. It is putting us in very good profit overall before price reverses on us. So we can add better risk management. We can potentially move stops to break even after it arrives at a certain price point or R. Now here we've got a potential A setup playing out. Let's just see if price can get us in or not. Okay, it's moved quite quickly. Okay, it's coming back. Okay, it's still nothing. Okay, we have got a situation price has arrived at this level, and we're just gonna have to execute that trade. I would have placed it just there, and would have gone for 0.5% just because of where we are at this moment in time. The swing, let's just do 0.5%. Not feeling too confident with this one. And just looking at it, the way it closed above this middle line, and we have opened up higher. This does look like potentially going to get stopped out. So get that 1% out. Okay, let's see what happens. Yep, price is getting a reaction. Got us stopped out. So straight away, what I've learned from this whilst testing this with you live is if we get a candle close above this middle fair value gap here, the likelihood of the continuation is quite high because we've seen it in the previous ones. So that's something to bear in mind. Now price is arriving. Can we get to that fair value, which we haven't yet? Okay, so based on what we've learned earlier, if price disrespects that middle line, closes above it, it's more of a B setup or no trade at all, and that's exactly what happened. So let's cancel that, and with a potential fair value gap there. Would I consider this as a decent strategy to test and trade? So far, it's not been too bad. Even though we got stopped out, we can reduce those stop outs by managing our risks better. So, okay, price has arrived. I should have got a better entry there. Moved it too quickly. You know what? It is what it is. I will just enter that trade a bit late. And let's see how the origin of that move from there to there is from there to there, which is a decent move compared to from there to there. And I'm going to do this as an A setup, and let's go for a 2-to-1, I mean a 5-to-1 reward to risk. Can we hit that 10k mark, or we're going to get stopped out? We'll find out in a second. So far not bad. Okay, we're up 7k guys. We are up decent amount. Some of you trading other strategy might look at this high and think, okay, we've arrived at this high, we might reverse ourselves. Key is, can we create more fair value gaps to go higher, which we have there. So can price go higher? I'm going to now move my stop. I don't want to place it there in case it comes down and wicks me out, but you know what, I'll place it just there. Just, it's protected, and if it does reverse on me, then I want to be at that trade. Let's see what happens. Okay, price has come into that fair value gap. Can we go higher? It stopped us out, absolutely fine, and we had a waterfall move to the bottom. So what we learned from this so far is price does react at previous highs, and we have also seen that small fair value gaps, the B setups, don't really play out so well, and having your stop loss at the candle low is a decent variable to risk. And had we managed our risks a bit better, meaning moving stops to break even, which I started to do a bit higher, it removes that guilt feeling, the one where we sort of say to ourselves, what on earth were you doing, you idiot? Why didn't you book your profit? Yeah, we could have booked there, but we didn't know that it's gonna be coming down. So that's why we made sure that price is under the next fair value gap. So overall, this strategy does look like, with a few tweaks, can be a massive hit. Let me know in the comment section, what do you guys think? And if this has been an interesting video, then give it a thumbs up, guys. Give it a thumbs up for me, really helps the channel. And if you're not already subscribed, then make sure you subscribe. This strategy has put us in the green overall, and I look forward to seeing you on the next video. Take care, speak to you soon.